So for number 2, we are asked to make the journal entries, and then we prepare the stockholders equity section of balance sheet, and then we prepare the statement of retained earnings of the company. So we start first from the journal entries. A. Issued 60,000 shares of common stock at 6, received cash. So if it is stated already received cash, so we directly debit the cash. Okay, so the cash, remember, we always use how many thousand shares times the market value. So 60,000 times $6, we get $360,000. And then we credit common stock. Remember, for the common stock, we always use the shares times the par value. So 60,000 times 5, we get $300,000. Remember, there is an excess, so that is the paid-in capital in excess of par, common stock. It is the difference between the cash and the common stock, so 60,000. That is for A. And then B, issue 7,500 shares of preferred 2% stock at 38. So if it is not stated, we assume that it is a cash. Okay, so remember, always use shares times the market value for the cash. So we get $285,000. And then for the preferred stock, we use how many thousand shares times the par value. Okay, so 7,500 times 25. So we get 187,500. So again, there is an excess. There is the pay-in capital in excess of par, preferred stock, 97,500. The difference between cash and preferred stock. And then C, issue 120,000 shares of common stock at $15, receiving cash. It is the same with A. So again, we use 120,000 shares times $15. For the common stock, we use 120,000 shares times $5, which is the par value. And then the remaining is the paid-in capital in excess of par common stock. So for D, declared cash dividends of 0.5 per share on preferred stock and $0.42 per share on common stock. So you are already given how many dollar per share that will be given to the stockholders. Okay, so the next thing that we need to do is to calculate how many shares that has been issued. Remember, this is only the beginning data, and then we have done the journal entries. So of course that the shares issued and outstanding has been increased. So for the preferred stock example, we take the 40,000 shares plus the 7,500 shares, so that the shares issued is 47,500. Okay, that is for the preferred stock. Okay, so remember, it is $0.5 per share for the preferred stock. So 0.5 times 47,500 shares. So we get 23,750 for preferred stock. For the common stock, it is also the same. So we take the $0.42 times how many common stock that has been issued. So 750,000 plus 60,000 shares plus 120,000 shares. So it is 910,000 shares. 930,000 shares that has been issued for the common stock. So we directly take 0.42 times 930,000 shares that has been issued for common stock. So the result is $390,600. Okay, so in total, the dividends that will be distributed to the stockholders is 414,350. So remember, when we declare the dividends, we debit the retained earnings and then we credit the cash dividends payable. That is for D. Okay. And then for E, pay the cash dividends. So it's very easy. You just debit the cash dividends payable and then we credit the cash, 414,350. So that is for the journal entries. For the second instruction, we prepare the stockholders' equity section of balance sheet. So in order to prepare this, we need first to prepare the statement of retained earnings. So we make the statement of retained earnings. We take the beginning retained earnings first from the question, which is $36,785,000, and then plus the net income. It is on the question already. Okay, and then we minus the dividends that we calculate in the journal entries. So the preferred stock, we know that it is 23,750. For the common stock, it is 390,600. So in total is 414,350. And then we minus it with the net income. We get increase in retained earnings 17,150. And then we plus the beginning retained earnings. We get $36,802,150. So after we have done the statement of retained earnings, we already get the ending retained earnings. So we can go to the stockholders equity section. Okay, so remember there are two parts. The first part is the paid-in capital. So always start from the preferred stock. Remember to write all of the information about the preferred stock. So preferred stock, $25 par value. It is from the question. And then 2% also from the question. And then 50,000 shares authorized. And then remember, for the shares issued and outstanding, remember to take the data and then plus in the journal entries. So 40,000 plus 7,500. So the shares issued and outstanding is 47,500. For the value or the amount, we take from the question, which is 1 million plus the preferred stock in the journal entries. So 1 million plus 187,500, we get 1,187,500. And then for the pay-in capital in excess of par preferred stock, still the same. You get it from the data, $240,000. You sum it with the journal entries 97,500. So you get 337,500. And then you sum it with the preferred stock, you get 1,525,000. And then for the common stock, still the same. You need to write every information about the common stock. So you also take it from the question. So common stock, $5 par. Okay. And then 1 million shares authorized. And then for the shares issued and outstanding, remember to take from the data and then plus in the journal entries 1. So 750,000 plus 60,000 plus 120,000. So we get 930,000 shares issued and outstanding. About the value, remember to take it from the data 3,750,000 plus in the journal entries 1, 300,000 and 600,000. So you will get 4,650,000. And then for the paid-in capital in excess of past is the same also. You take it from the data 6 million and then plus in the journal entries 1, 60,000 and 1,200,000. So in total it is 7,260,000. You sum it with the common stock, you will get $11,910,000. So for the retained earning, remember to take it from the statement of retained earnings, the ending retained earnings. So 36,802,150. And then we sum all of them, we get the total stockholders' equity 50,237,150. So that's all about our assignment.